This is your host and host, Mr. Bond, welcoming you back on Mutual Funds for All, no age limit. We have Mukul Pasricha once again with his set of query, and let's see what this week in stores for all of us. Welcome back, Mukul, and what's your next query?
So I'm an aggressive investor and I don't mind taking that additional risk to generate that extra income. So do you suggest that I should invest in small cap equity schemes?
Sure. The first and foremost, you must understand that there is nothing like aggressive investor or a conservative investor. The most aggressive investor becomes the most conservative when the markets go against them, and when the most conservative investors become the most aggressive when the markets are in their favor. So we should not be bracketing investors as aggressive and conservative. Instead of that, we should be bracketing the investment strategies as aggressive or conservative based on market valuation. So if I ask you this question, remove 500 rupee note from your pocket and throw it out of the window, will you do that? Because that 500 rupee also pinches you, right?
Right.
So no investor likes to see his wealth eroding, irrespective of whether they are aggressive or conservative. So take that out of your mind that you are an aggressive investor, and then decide on whether you should or you should not invest in small caps, mid caps, etc. But create a strategy which is aggressive strategy when the market valuations are cheap, and conservative strategy when the markets are extremely expensive. So that will guide you on the right path. Am I clear?
Thank you for that answer.
Great. Thank you so much for coming for this show, Mukul. We'll see you next week with another set of query. This is your host and host, Mr. Bond, signing off. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.